Hello and welcome to the Boom, Doom and Zoom show. I'm Peter Switzer. Joining me as always is my colleague Paul Rickard. Hi Paul.
Good afternoon, Peter.
It is just something by a millisecond, Paul.
It's been a tough afternoon if you live in Sydney because of the Harbour Bridge disaster this morning.
It took you 3 hours to get to work.
Yep, but anyhow, that's a challenge for some Sydney-siders. So.
Yeah, but there's other challenges out there. It's been a big day for reporting, Paul. Why don't you run through some of the big names, not the results, but some of the big names that may well be a conversation for today's program?
Well, probably I'll just do two, Peter. Woolworths this morning. Look, that's probably pretty much as expected. I think the interesting thing of the Woolworths report is that it actually beat Coles again. There's probably two things. It beat Coles again in the fourth quarter. Coles had sort of crept back up in the so-called supermarket wars. And looks like it's maintained that momentum into the first 8 weeks of the year. So their sales up, I think, 8.9% in the first 8 weeks of FY21. They're talking about higher COVID-19 costs, which I think is expected. So, and then also Big W actually made a small profit. So there's a big turnaround in Big W. So I think they're the two positives out of the Woolworths report. That's why the market's up.
Yeah.
Dividend pretty much as expected. It's actually down last year. Ramsay's also looks to have done okay, although maybe I think there's a lot of negativity going into the Ramsay result. No final dividend from Ramsay. And I think the other reports are still work in progress. There's a lot to digest this morning. So
Afterpay and Zip and
look, they're probably a little bit weaker. I mean, again, most of that stuff's been pre-reported, but when you keep going up, eventually you get price for perfection. So just I guess a pullback.
Maybe price for imperfection.
Well, I think the Zip one yesterday, I didn't think the eBay was that significant. I think it's interesting, but anyhow, the market liked it. So
was a supporter of Zip from the Zip stocks. I'm very happy that the market likes it. But I actually this morning did a quick calculation. It was about March of last year when I did an interview of one of the Zip founders, and it was about $1.20 or something like that. Since that time, Zip is actually up over 400%, where Afterpay, which is around the $20, $30 market time, is up about 330%. So isn't it interesting that the concentration is always on Afterpay because of that big number, getting closer to 100. But Zip has risen more over that period of time. But I think they're both good companies, but I do think that the pricing of them are quite extraordinary. But the same thing was said of companies like Tesla and Apple and Microsoft and Netflix and Facebook, and they kind of defy markets, don't they, Paul?
They defy gravity a little bit. I think I got the spectacular on calling them a sell about $70.
There's a lot of people out there crying.
The stock that I really like at the moment, Peter, I think is CSL. I think it's why it's up today. I think we are starting to see a little more. The market. We get this positive lead from the US each morning. We look at what can you buy? Well, Zip and Afterpay, that's exciting. No one wants to touch the banks. The retailers are way overdone, and the stocks that sort of are still lagging. To me, I think the standout's still CSL.
Yeah. But I think you are ignoring something, because like both you and I were big supporters of Xero, and it's done very well. But it is a more old-fashioned business, even though it's in the high-tech space.
Well, it's up to $102.75. I mean, I like Xero too, but it's super expensive.
It's surprising us. It is surprising us. It's good to see that we got that right. And also, like, there's a company like WiseTech. There were question marks over WiseTech last year because they were expanding too rapidly. I think about a couple of weeks ago, the CEO said, "Well, we're going to stop doing it. This expansion stuff." The market instantly liked it again.
Anyhow, we should move on to questions, Peter.
Yep, let's go. So our first question is Rob Millevoix. With the power speech later tonight, what do you think the outcome would be for the equity, bond and gold markets? Also, why did Appen fall more than 10% today?
Why don't you do the first one, Peter? And
yeah, well, look, I don't think Powell will say anything to rock this market. So, Rob, I have no concerns whatsoever that he's going to do anything that will rattle this market. He must be, cock a hoot that the Fed's policies have helped not only the stock market go up, but we're starting to see bond yields also improve. Well, I haven't watched it the last couple of days.
Well, but they're back up. I think bonds there's going to be so many of them.
Yeah. I'll show you. I'll tell you one other thing which I haven't shared with you, Paul, and I'll share with the audience is that Ed Yardeni, I think, was former chief economist of Deutsche Bank and now has Ed Yardeni Research. And he's not what you might call an instant, bull market enthusiast. But he came out with a report during the week that the economics of America is actually coming in better than expected. And so I don't think there's any reason to believe that Powell will say anything to spook the market. If he did, well, I guess his president might not be a president for much longer. But if Donald Trump survives and Powell does something silly before the election, I think Powell will get his ticket of leave very, very early. Paul, what happened?
Well, I mean, it's sort of, I guess, the hasn't quite done as well. Appen reported this morning, revenue up 25%. Yeah, I mean, I guess that's sort of probably on the lower end of where the market was hoping for. These stocks are priced for perfection. It's not 25% is okay. It's perhaps not what you'd be looking for. It also says that just looking at the outlook statement, it's okay up to August, but it's probably not as good as the market may have hoped for.
But Paul, that bounce is unbelievable when you think about it. And there are profit takers out there, Rob. And when a stock does so well, profit takers will take their profit knowing that trend is so strong, it will restart again and they can actually buy at low levels. So I'm not surprised at all that Appen should be, going off the boil, Paul.
I mean, these things are priced for perfections, Rob. So you have to keep delivering, or keep making announcements, right, about what you're buying. But that's I think Appen is just hasn't done perhaps as well as it's been pitched at.
Alan's asking us a hard question, Paul. Checking your opinion on Air New Zealand after their report today.
Sorry, I didn't say it. I don't know. Look, you have to pass that one to the Kiwis. AIZ.
I'm sorry, Al. I don't think there's enough interest locally in Air New Zealand. When I had a holding inversion, I think there was a little bit more interest, but at the moment, no. But if I have a Kiwi guest on the program next week, I'll throw it at them.
I don't think we even get an analyst report on that, so no. I don't think it's any local coverage. So I'll check that.
Yeah, anonymous attendee interested in your thoughts on EML payments.
You read about that last week, right?
Yeah, that's right. And all I can say to you about EML is that I like the company, but I was basically steered onto it by Julia Lee, first of all, quite some time before it took off. And then last week, when I was talking to Adam Dawes from Shaw Partners, I just threw in, what's your view on EML? He said he really likes it. EML is a company I bought on the basis that I never expected it to do brilliantly well in the short term, because it's involved in those store cards that clearly are being affected by the fact that shopping centres and retail outlets aren't doing as well as they used to, plus casinos and things like that. So to me, it's the kind of stock I'm investing in on the basis that when we get back to normal, its share price should re-establish itself. I think that's and also Julia says that they've also got into other areas, I think in the UK, which gives it more potential as well. So it's one of those sort of speculative type stocks. It's not an old and entrenched company, but I do believe in the story that when we go back to normalcy, shopping centres start re-establishing themselves. People will get tourism going on again, and casinos and all those sorts of gambling venues are doing very well. I think EML payments will be well placed, but at this point in time, I'm not surprised it's not shooting the lights out. But I don't think it's disappointing all that much, is it? What's the latest on EML payments? Came rip-roaring out of the March 23 low and has basically gone sideways. I think that's pretty well consistent. We're waiting for the next leg up. And I bet you one thing for sure, Paul, if Victoria hadn't gone to lockdown, that fall away, which we've seen, probably since June, probably wouldn't be there. Okay. Our next question, Jason, are there any rare earth ASX stocks that you like?
Oh, look, we've done rare earths. I thought rare earths must be coming back from fashion again. Had a couple of those.
Yeah.
Look, I'll take that one on notice.
Yeah. good. Yes,
I
that's a good
think
question
if you
for our
go back
experts,
through
yeah.
our archives, you'll see lots of articles on rare earths. But
Yeah,
I take that on
to be
notice. But
fair, we're not. Look, and I've got to say, I think they were overpriced for too long, and they became a real trap for people who, I don't think there was even a substantial dip worth buying into. But I must admit, it scared me off, and I haven't, tried to become an expert in rare earths. But some of my experts might. So on Monday night, I'll show it at Julia or someone like that. Okay, what are your thoughts on the EFT Asia?
look, I just cannot. Let's have a look at that. I haven't actually seen what Asia's been doing. I mean, all markets would be good. Whether that's going to be as good as the US, I don't think so. Look, I don't know. They told the Asia technology tigers. As you start getting into,
Donald Trump trade war.
And I don't know. I just think you're probably better off playing the US rather than Asia. So that's a bit of a homegrown bias, but you just don't know. And what, they're not arguably free companies. So
yeah. You don't know what kind of government interference is involved.
Either from the US or more probably from China.
Let's face it, Tencent would be in there, and Tencent, and TikTok and all those sorts of related companies to that sort of business. So I think the important thing is this: if you're in, and I went back to Michael Knox, the chief economist at Morgan's, only last week, when I saw a story that kind of indicated that maybe the US dollar won't fall as much as what Michael Knox had predicted. And I said to him, what do you think? And he came back and said, the US budget deficit is heading towards 20% of GDP. He still strongly believes that the US dollar falls. Now, if the US dollar falls, it's good for emerging economies. So when the dollar goes up, emerging economies suffer. So that's the only argument I can put out there to suggest that that trend in that chart could continue. But the better time would have been to get in maybe March, late March, early April or June, and maybe to be taking profit now. But I think there is an argument out there that this could keep on going if you believe that the US dollar is going to keep on weakening. And I must admit, today the Aussie dollar was up against the
US dollar is going to keep weakening, Peter. That's my view.
Yeah. So therefore, you've probably got some potential there. Mesoblast, please.
How can anyone track Mesoblast?
If you missed the TV show last week, Julia, who is our Mesoblast ambassador, tipped it a long time ago, had a bad night's sleep a week ago when it fell. Is sleeping pretty well now. There's an FDA ruling coming up in a couple of weeks' time. If you want to have a look at that TV show from Monday, she talks about, and she listening to Julia, she had a fair degree of confidence that the FDA is going to say the right thing. History has shown that FDA can throw curveballs at these sorts of companies, but I've got to say, deep down, I suspect Mesoblast is going to be a company for the future. But as you can see, you're going to get those kinds of things, those kinds of volatile moments in their life. If you look at the pattern there, down, sideways for a while, up, then down, and sideways for a while, probably the sideways for a while type position for Mesoblast going forward. Next question, Bravura Copter, I think, Paul. Just yesterday or the day before. I haven't got
a chance to look at Bravura.
I haven't got a view on Bravura. Rudy was the first person to actually bring up the fact that he liked Bravura. I'll just see what the analysts are saying, but I don't think analysts would have had a chance to really update their views on it. Let me have a quick look. And while I'm doing that, Paul, what are your thoughts on ZIP and MND?
ZIP, I prefer ZIP to Afterpay, but I thought the announcement yesterday was not worth what it did. So I'm not surprised if it's come back a bit. I just don't think the eBay announcement is as big as the market made it out to be. So pass on Zip at $9 and wait a bit on that one. MND, look, we keep on getting asked. MND Monadelphous. Again, I'm going to have to see.
Well, no, it did really well, Paul. And I will say that I was a big fan of Monadelphous. I'm not invested in it, but it's done very well. Do I buy now? No, I don't. See the big jump there last week. Surprised analysts. Does the future hold a bit of positivity? Probably. There's the jump more magnified, but it reported pretty well, and that's the reason why the market jumped up on
it. Okay, we move on.
Yeah, we move on.
I'll find those.
Yeah,
you.
I'm having trouble
Okay,
getting into it.
You.
All right, so John, what are your thoughts?
Just on Monadelphous, so the analysts have got a forecast of target of $10.93, which is about 1% below the current price.
And that was after a pretty big jump last week, Paul.
And most of the analysts are neutral on the stock. So only Macquarie has got a target 11.57, and City's got a buy up to 12.63, but the others are fairly neutral on it.
Okay, let's go to the next one for John. And what are your thoughts on Imogen, IBX at the moment, as they move towards a human trial, good level of confidence? Do you view this as a good long-term investment?
IVX.
IBX.
Oh, IBX.
Yeah, IBX.
Again, biotech, no idea. Sorry.
But
we'll take that one notice.
Yeah, and certainly I've got John Bragg here writing it down, John, and we'll certainly
it won't be.
Yeah, we'll throw it at our experts next week, and the analysts don't cover it. So really, it's just like fingers crossed. Let's hope they're heading in the right direction. But one of my experts on Monday may well cover it for you, John. This is the one that Paula has a very, very strong view on. Tabcorp.
That's a dog of a company.
It's got a new CEO. For Paul, it's paid a reasonable dividend over time. Why do you call it a dog of a company?
Because it's a chronic underperformer. Yeah. It's badly led, badly chaired. It bought Tats, which was an outperformer. It smothered Tats in its operation and killed it. Right. And it keeps on doing the same mistakes. So I have zero confidence in Tabcorp as a company.
Yeah.
And when you say it's got a good dividend, well, it's currently yielding 2.2%.
No, it used to be.
Yeah.
Well,
but it's cheap. I mean, so let me see what the analysts say. So they have a target of 384.
Yeah. So that would be about 6.5%.
I just think if it's in the AMP category of companies, I reckon.
Yeah, really.
Yeah.
So, certainly, I would say they haven't dealt well with the rivals out there in the digital space. It's just like there seems to be a new rival to online betting nearly every week, and as you can see, it's not an inspirational chart. There is a.
This is the same company whose shares in the original TAB of New South Wales were $2.57 back in 2000 or 1997. It's now priced at 360. So that's what it's done over 20 years. It's a shocker.
And what about the share offer, Paul? The share offer?
Oh, well, I think that's a different question. I mean, maybe I just can't recall what the offer price is, but if it's trading below the 360, then arguably you should accept, and then you've got two choices: either sell some of your shares in advance of it, or hang on. Yeah. I probably would sell out.
Yeah, and look, it's a fair question to ask because a lot of people probably are in Tabcorp. I'll see.
I don't think we need to take that one, Peter. That's we can move on that one.
Yeah, I just the new CEO often can offer hope. Not always.
Well, I think it's a new CEO, new chair. I think the whole thing. I mean, I'll just give you the example. Tats was a good company. They bought it and they killed it. Everyone went. Everyone of the Tats executives went because the board and the existing management said, no, we Tabcorp are going to run it. And you can see, if you go back, just to put the share price, go a bit longer of the company, Just go back, say, 3 years or 5 years, right? No, but there's your 5-year chart, Peter. Look at that, right?
Yeah, no, impressive,
Okay?
Paul.
Unimpressive. This is an unimpressive company.
To me, tomorrow I'm thinking, Paul, I think you're being very unfair calling it a dog, because not even a dog deserves to be called that. All right, so let's go to the next one.
I think it's in the AMP category, right?
This is a small company. It's the short and the long view of My State, MYS.
Look, I don't know why we get questions on My State. It's a Tasmanian bank. I think it was the old building societies and credit unions that came together.
Yeah, but didn't the Queensland Bank also buy it to call it My State?
You have to ask for that. Again, I don't really see the attraction in regional banks.
This is his view. He doesn't like regional banks.
No, they can at times be very attractive if they're super cheap, but they are. If you look at the,
Bendigo didn't report well.
they are struggling. They're not winning market share, and so they're underinvested in technology. So if you look at the thing, the banks that done best has been Commonwealth Bank. That has most invested in technology, and the banks that done worse, particularly some of the regionals, are underinvested massively. Right?
Yeah.
So my view on My State, I think at times if it gets to big enough margin against the majors, it could be attractive.
Yeah.
But
this is another interesting issue because John was saying I'm playing for dividends. Historical yield was around 6%. First half 2020, 3.6. No dividend second half, but promised dividend in the first half 2021. I'm a relatively conservative SMSF investor. Now, Paul, you've looked at the dividends. How likely is it he's going to see a 6% yield again in the short term?
I don't know if I can comment on My State, but I think it's unlikely. We'll just see what the analyst forecast, if I could just find that. What's the code? Is
MYS.
So let me just see what the analysts are saying, which is probably, they'll have done this a lot more in depth than it's just big on My State, if anyone covers it.
I couldn't get a coverage.
Unfortunately, there's no coverage. So again, I think that's probably unlikely.
Yeah. All right, let's go to the next one. This is Scott, and Scott wants to know AGL as a yield stock.
Look, dividends are. I think that there's no franking the next 2 years from memory, is what they said. I think AGL is still a slightly challenged company. It may be getting to the situation where it's now getting cheap enough to be attractive. Again, a company I'm hugely critical of AGL because they totally mishandled the government over Loy Yang, and the board there should have gone. And that's why the electricity prices come down so much, because the government was forced to take action.
Yeah.
So the smart thing would have been to cooperate with the government, but they dug their heels in and said they want to be a renewable company and we're not going to keep Loy Yang going and we're not going to sell it and all those sort of things. So the wholesale electricity market has been really squeezed, and that's why AGL is under pressure. Now, as a yield stock, it's probably worth almost looking again at. 6.7%. I mean, it's probably got to that level around $15 where it's about getting to be a bit of value. I remember
the target price is $14.83.
Yeah, I remember reading a lot of analyst reports how it was at $25 saying it was going to go to 29, and right at the sort of time that they were arguing with the government over Loy Yang, I thought this is crazy. Yeah. Yeah, look, it may be worth having a look at. I'd mark that as a stock to watch,
as a yield stock, but I wouldn't have the view that it's going to return to the kind of levels you're used to, but it could be better than a lot of other yield stocks out there. Good question. It's a really good question. That could also be something.
The interesting thing about AGL is it tried to pretend it was really heavily into low carbon renewables, and in fact, 95% of its revenue comes out of its coal-fired power stations.
Yeah.
And the one issue that the government was really worried about, it took them on, it lost, and the government was forced through the ACCC really to put a lot of downward pressure on wholesale electricity prices. Yeah. That's cruelled its revenue. It never built.
And that CEO's gone.
That CEO's gone, but the other people, the board hasn't gone, right? A lot of the board should have gone as well because they protected it.
Okay, let's go to this one, Paul, from Frank Cipriani.
So,
I am trying to understand how one buys into gold. Is that bullion?
why have we got Virgin Money on the screen? I don't know. Okay, gold. Okay, you want to do gold? The easiest way to buy gold is the ETF GOLD. Just put that up. If you want to own the physical gold bullion, well, you have three options to buy into gold, right? So there are three ETFs. GOLD is probably the biggest and most traded, but there's also a couple of beta shares ETFs, one of which I think is hedged, which is QAU, I think it is. Just try that, John. Is it QAU? Yeah. Yep. That's currency hedge, so that means you're getting gold back in the Australian price. That's possibly the way to play it. So there are your two ETFs. The second option is to buy the physical gold, which you can do through the Perth Mint. You go to the Perth Mint, there's also other bullion dealers, and you can actually, you can buy and trade it and all that sort of thing. So you can actually own the physical gold bullion. Well, the third way is to look at gold shares. That's the riskiest way. It's companies like, obviously, like
Northern Star,
Evolution Mining, Newcrest,
and the point
St.
I often make,
Barbara, and there's a fifth, Regis. They're the big five.
Yeah. And the point I often make is that you sometimes you can get the gold price right, but the company can be making mistakes that, in the end result, means that the share price doesn't translate to the same extent as the changing price.
Yeah, I mean, obviously, the greatest leverage, if you're after a leverage play, is going to be the gold companies because they have fairly fixed production costs. You can find out those, and so they're very, very leveraged in a profitability sense in terms of the gold price. And then the bullion, downside of bullion is some cost to hold it, but it's pure. I think the ETF is arguably the simplest, and then there's a question whether hedged versus unhedged. And my own view is I'd be staying hedged, I think, but so maybe QAU, I think, is probably looking more attractive.
And the reason for hedged is that you believe Aus dollar up, US dollar
US dollar down, dragging the Aussie dollar up, I think is.
Okay, next one. Yeah, Virgin Money, VUK. Paul?
Again, pass. I can't see any reason why you'd want to own this unless you are left with shares out of the NAB demerger. This is a third tier UK bank, right? Yeah. So why Australian would want to own a third tier Australian UK bank? I don't know. If you have shares out of NAB with demerger, then it's a different purpose.
It went for a nice little jump up around May, June, and I guess some people are thinking, well, is there another leg up? But there's nothing really in the UK economy even that can make you feel really positive at the moment as well.
I just don't see why it's key to owning it. It's hard enough to keep track of Australian companies. This is not an Australian company, right? No, this is not an Australian company. This is a result of a demerger. That's the only reason there's a listing on the ASX. And so it's like saying to me, go and buy a third-tier US bank, which you've never heard of. Sure, if you know a lot about it, great. But if you don't know anything about it, it's a different proposition to buy a Facebook or an Apple or something that's so global. This is a tiny little bank in the UK.
As you can see, it can be very contained with very minor issues.
People own it. Just because it's listed on the ASX is not a reason to buy it. This is listed because it was demerged out of the NAB, and some NAB shareholders still have shares in it.
Yeah, but what happened in the UK is a Virgin franchise, was Virgin Money, actually bought Clydesdale. And
Clydesdale bought Virgin,
right,
and renamed it. But it is still, said. It's still.
And they're probably sorry after the implications of the coronavirus.
Bear in mind here, the $4 was where it was worth when NAB demerged it. And that, if you go back 3 years, you'll see it was about $4, and now it's $1.70. That's my point about it. Sort of, why do you need to own it? I just don't think that's just the company to be in a portfolio.
Okay, let's go for SPT, Paul. SPT.
Another one of the famous companies.
Which has had a nice run lately.
They have done a capital raising, I think. So they've had a huge run when they. Another one of the payments companies to look at. They've got a model. Which I think is interesting. Yeah. I don't know how, I think they had a run up when they've done a deal with someone in the US, I forget who it is. And I just don't know how advanced that is into rollout stage.
Yeah. I think the chart is telling you that the market thinks this company has potential. but it's had a very big run up, so there may well be a buying of the dip opportunity. But from all reports I get from the young people in my life, it's not a bad idea to split it in their life. So therefore, but given the rise so far, I wouldn't be jumping in with enormous enthusiasm at this point in time. Jim Hall, what about FANG stocks? Gee, they've gone for a big
Well, when
run,
Facebook up 6% or something last night, Netflix up 10 or 12%, whatever it was. You want to buy FANG stocks, not directly, you can look at the ETF FANG. Now, it's a bit misleading. It's not just the FANG stocks. It's from ETF securities. There are also 6 other stocks, so it's 10 stocks, which so includes things like Baidu, Nvidia, Twitter, one of the other, Alibaba, and I forget who the 6th stock is, but that's probably the easiest way to access the FANG stocks in Australia. It is also currency hedged, which I'd say is probably a positive for it.
One I've got no idea on, Paul, is 5G.
To pass on that, that's a take on.
It's a networks.
Yep.
Limited. Yep. Okay, but we might put it to one of our experts on Monday night. Hugh has a question on Macquarie. I'll get back to Rob Stevens in a second. MQG.
But look, we like Macquarie. It's not doing a lot at the moment. It's sort of it's in the unloved area, I guess, because it's sort of banks are a little out of favour. Macquarie gets caught up in that as an investment bank. The currency is also working against it.
But it's a nice rise still for
I mean, it's a portfolio stock, I think, Macquarie. I don't know whether there's an immediate trigger to take it to a new level. The currency is going to act as a headwind to it.
Yeah.
Because now about 60% of its revenue comes from outside Australia. But I wouldn't be throwing it out. And,
no, definitely not.
Chart, I think it's probably...
And probably over the next 6 months, it'll probably creep into the 130s because its performance will be pretty good. The currency will work against its performance. But yeah, I wouldn't be selling Macquarie. I can't see any reason why I'd be selling off terribly. Rob Stevens, the ETF ticker SDIV is a high dividend ETF investing in 100 global stocks. Do you rate this or any high dividend ETF to invest in?
I don't rate the high dividend ETFs generally. I just don't know how this one's put together. You got to be careful with some of the high dividend ETFs. They can redistribute your capital as a dividend. That's not unusual out in the marketplace. So you think you're getting a big dividend, but they're just giving you back your capital. So have you got SDIV? Can't get that. Okay, get the code right. I don't.
No, haven't got that.
I just think I'd be careful of those sort of. Again, the critical thing with any ETF is to look at the underlying index and see who puts it together and what its components are. Remember, an ETF is just a slave to an index. So I don't know whether and if you look at the fact sheet, you'll be able to read just how the index is put together, and I don't know what the criteria is it's using there.
Yeah, Vanguard's got a high yield dividend.
That's VHS, yeah.
VHS, it's done pretty well. Obviously Switzer has done okay, but there's hard times for dividends. A lot of the big organisations, particularly banks, are cutting them down. So they'll all come back in time, I believe, but in the short term, it's going to be a bit challenging. Okay, so we're getting the wind up here, guys. I'm very sorry we haven't got to you all, but we will glean through, and some of these will end up being stories in the Switzer report, and we'll get our experts to do them for you. So from my point of view and from Paul's point of view, thanks for joining us. I see the question there about my ZEET stocks. I think I covered it in the Switzer report last week. So that's my view. Still a believer in all those stocks and very happy to be associated with them. But it's going to be more like next year rather than this year before they start, performing at their very best. Those Zipper's already doing it, and Tyro's done pretty well as well. Thanks very much. Talk to you next week.